Welcome to the Real Housewife of Alaska, where I take you on my journey from corporate dropout to Alaskan homesteader, where I reclaim my health and happiness, getting out of the office and plugging back into nature. Today, we've warmed up from negative 25 degrees to a balmy 13, so I thought, let's go ahead and do our recording outside so you all can enjoy the beautiful view from my backyard. And my two Akitas, Loki and Thor, apparently have decided to join us today. Um, Here in Alaska, you need your dogs to be big enough to chase whatever's chasing you. We spent a lot of time out in the woods, so two of these wild beasts are what I require. In today's episode, I'm going to run down how you are going to turn your life into a business. And doing so, you are going to be able to step away from the office, not have a boss, not go into work Monday through Friday. You're going to create revenue streams. You're going to maximize your tax deductions and hopefully be able to develop generational wealth. So, I'm going to run down the list and then I'm going to go into detail, but you're going to want to save this video, maybe even send it to a friend because I'm going to tell you stuff you're not going to find anywhere else. Okay, so here we go. I'm just going to run down the list really quick and then we're going to dive into the details of it. First things first, you're going to want to create an LLC. This is going to take you 5 minutes, anywhere from $100 to $150. You're just going to go on to your state's website, create an LLC. It's got to be a unique name. You, from there, number two, are going to create an EIN. This is essentially your social security number for your business. So it's really important to create an EIN. It's so simple. It will take you 5 minutes and it will cost you $0 if you do it on yourself by yourself. Don't pay another company to do this. Certainly don't use one of these like terrible offshore companies like LegalZoom. They're just going to take your money. They're going to do a terrible job and it's going to take months for them to do what you can do in 5 minutes. You're just going to Google create EIN number with IRS and you're going to click a couple buttons and I swear that's it. It's going to default to a tax structure of sole proprietor. Now, in the beginning, this is the way we're going to keep our business from a tax structure. We will eventually change that. I'll get into why that's important. Okay, so now we have created our LLC, we've created our EIN. The next thing we're going to do is turn right back around and start applying for grants. Yes, grants, free money, that's out there. This money is for the sole purpose of expanding American farming systems and infrastructure and developing self-sustaining systems for Americans. So if you want to start your homestead, if you want to create a multi-generational home where you're feeding your family, if you could do agricultural tourism, even like give lessons on milking goats. This is all going to fall underneath the breadth of these grants. We're talking anywhere from $1,000 to hundreds of thousands of dollars that you get for free. So, LLC, EIN, start applying for grants. The first place you're going to start, the first grant you're going to want to apply for is you're going to want to search who your local farm service agency is, your FSA agent. You're going to reach out to them and you're going to tell them you want an application for your farm record number. Let's get my coffee really quick, which is probably an iced coffee by now because it's been sitting out here for 2 minutes. No, it's still good. So now you're going to get the application for your farm record number. Once you get your farm record number, you are now eligible to apply for the EQIP grant, EQIP, which is Environmental Quality Improvement Initiative. This grant is worth $50,000 every single year. It's going to cover some fencing, there's caveats to that, but irrigation, solar systems, high tunnels, low tunnels, greenhouses, soil prep and testing, erosion planning, and quite a bit more. Also, with your FSA number, farm record number, you are going to be eligible for If you fall into the category, which most of us are, new farmers. So if you are a new farmer, and then even higher priority if you are a minority or a woman-owned business, and this is just self-claiming. So if you are a Black woman, you would claim that you are a minority woman-owned. If you are a white woman, you would, in your business is owned 51% women, you're a women-owned business. If you're a minority or a vet, it's really just self-claiming. So higher priority for new farmers, for minority owned businesses, for women owned businesses, because again, the whole purpose of these programs is to increase the sustainability of our farming infrastructure here in America. And so making sure that there are still small farmers here and it isn't all gobbled up by big corporations. Now, the FSA has loan programs which are fantastic. We will be utilizing these loan programs absolutely. It's, anywhere from 5 to 0% down on your loan, and the interest rate is around 4%. You can't get those sorts of terms anywhere. Even I'm with the best of credit, you wouldn't be able to get those terms. So this is a way where we're going to save tons of money, maybe get tens of thousands of dollars, maybe hundreds of thousands of dollars, depending on your operation, free every year. There are, once your operation is up and running, there's going to be additional grants. It goes on and on. Okay. Now we've got our LLC, we've got our EIN, we are applying for grants, and we've made sure to reach out to our FSA office to get our farm record number and start that grant loan process. You want to now create a business bank account. Okay. This is why we created our LLC and why we kept it as a sole proprietor for now. So you're going to create a business bank account. It's not really a difficult process. It just takes a little bit of time because they want to make sure that you don't have like casino operations, because you obviously can't have a business bank account with that. I need this coffee to warm my hands because it's cold out here. Okay. So now let's say you want to become a homesteader, you want to become a farmer, you want to expand your operations. So we've just turned our business or our life into a business. This is what we did with our LLC. So now I'm going to take my business bank account and I'm going to put in whatever my capital is. Maybe it's $500, maybe it's $20,000, whatever I have to put into clearing my land, whatever I have for lawyer fees, whatever I have for marketing, for social media platforms, whatever that expense is to get my business up and running. This is an expense. So I'm going to take my money, I'm going to invest it into my business bank account. And whenever I purchase something now for my home on my farm, or I put up a barn, or I do repairs, or I purchase horses, or I purchase goats or peacocks, or whatever is part of your farming operations, this now becomes a cost that you're going to deduct from your income when you file taxes. Okay, so follow along with me. In the beginning, when you're getting your homestead up and running, let's say you have a house, you have a property, and you're adding to it. Let's say you have none of it and you are investing all of this. This is all capital expense that will be deducted from your income at the end of the year because you're going to show a loss. More than likely, you're not going to have enough revenue in that first year, maybe the first 2 years, for our business, which is our life, right? We're developing this whole sustainable life, and whatever goes into it, it's falling under these farm grants, it's falling under these parameters, and it's part of our business. So it's capital expense. And so the way that it works is I'm going to take $500, $5,000, I'm going to put it into my business account, and let's say for my business, I'm going to pay $500 to promote a TikTok video. That's a business expense. And so I'm going to take those funds out of my business account. And now let's say I need to take a farm soil testing class. Well, that is a business expense. So I'm going to take it out of my new business account. so on and so forth. Let's say I need to build a farm stand to sell my vegetables or my fruit or my flowers or my honey or my cheese. Guess what? Business expense. So now that we are operating a business on our farm, we're calling our homestead a farm because essentially that's what it is. And we've created this LLC and we're operating like a business and we're operating out of a business account at the end of the year when I've put all this investment into my life, into the ability to work outside of the office, into my departure from having a boss. It's all tax deductible. Because at the end of the year, because I'm a sole proprietor, I'm going to say I've invested all of this into my life, into my business. I haven't, listen, maybe you've taken in $500 revenue, right? So you're going to show $5,000 loss plus $500 revenue with a net loss of $4,500. This is very common for businesses in the beginning. You're building. And so you deduct $4,500 from your income taxes. So now we've turned our life into a business. We're on the way to becoming self-sustaining. We're on the way of producing our own revenue. We're on the way of making our own terms, creating freedom, leaving societal norms, and saying, hey, I'm going to think outside the box and I'm going to do it smartly and with a plan. And now here I am being able to improve my life, and it's a tax write-off. Okay. So when you get to the point where you are bringing in more revenue than you are expending cost. Okay. So now let's say the tables are turned. Let's say now you're bringing in $4,500 revenue and you are only spending $500 cost. So there's, in the curve really of any project, of any business, the heavy expense in the beginning, heavy expense because we're ramping up, we're building the infrastructure, and then there's very little revenue, and then we're going to hit a spot where we have revenue. So now let's say we're 1 year in, 2 years in, 3 years in, whatever it is. And now we are generating more revenue than we are expending cost. Now, and this is where you might want to tap an accountant in at this point, you're going to want to change your business tax structure. So this whole time we've been filing as a sole proprietor, which is the default to that EIN that you applied for. And you just Googled IRS EIN number for business and the link's going to pop up and you're just going to follow a couple of prompts. I swear, this is how simple it is. And at the end of 3 minutes, you're going to have your EIN number, which is your tax social security number for your business. But now we're making revenue. So we're going to change our tax structure from a sole proprietor to an S Corp. So this is going to change a little bit about how you pay yourself. But now that we're bringing in revenue, we want to change the way we file our taxes. This is very important. This is just savvy tax information. So now we file our business as an S Corp. If I have children under 18, if you have children under 18, you can pay them tax-free. Mm-hmm. Mm-hmm. You can invest into them tax-free. Okay, so do you see? We're now building generational wealth. We're turning our life into a business. We're maximizing our spending capability. We are building an infrastructure that makes us sustainable and allows us to leave corporate America, standard society, think outside the box, and get plugged back into nature and reclaim your health and happiness. Oh, yes. Hello, Loki. Okay. So run through this one more time. Again, you might want to save this and come back to this later. You're not going to find this advice anywhere else. You're going to file for an LLC. You're going to file for an EIN number. You're going to start applying for grants and starting with your FSA farm record number. You're going to get a business bank account. You're going to take your own money and put it into that business bank account as your capital investment as an owner. And you're going to start investing into your homestead, investing into your farm, utilizing these funds so at the end of the year, it is now completely tax deductible against your earned income. And you are going to, once you start generating a decent amount of revenue that is more than your cost, you're going to switch your tax structure to an S Corp. You're going to start paying yourself, you're going to start paying your children, and you're going to start building this sustainable infrastructure, learning how to be part of a community that really is reviving the lost art of sustainability, learning how to grow your own food, learning how to preserve your own food, learning how to make your own clothes, learning how to live off your land. But we want to do it as efficiently as possible and with the smartest plan with our hard earned income so that we can leave that office sooner than later. I hope you found this helpful. I really think that there's just a way to think outside the box and to live a life outside of what society says we have to live. And, maybe snow and cold is not your bag. It is really 13 degrees here right now. And you can be like, oh, that's not what I want. But I bet there's something close to it. Some rural land with some birds in the background, you and your significant other relaxing on the porch, watching the sunset, being involved in your children's life, being involved in your grandchildren's life. For me, I missed the boat of getting to be a stay-at-home mom. I was that corporate feminist that, could do it all. And for the love of fuck, I gave it a go. I tried it. But now I'm hoping I can invest into my older years as I'm heading towards 50 and be able to have some time with my grandchildren, to be able to teach them the lost art of being sustainable, to invest back into generations who are going to be able to hopefully pass down this generational wealth that goes beyond revenue. It's the skills that we learn and the life we get to live. Thanks for joining me for this episode. I really appreciate it. I look forward to our next one.